Hello, everyone, and welcome to our channel. Today, we're going to dive deep into the copper market, a metal that plays a crucial role in the global economy. As the world shifts toward green energy and electric vehicles, EVs, the demand for copper is surging, making it a key focus for many investors. In this video, we'll walk you through an in-depth analysis of copper's fundamentals, technicals, and price forecasts for the short, medium, and long term. Whether you're an investor or simply curious about the market, this video is packed with insights you won't want to miss. Let's get started. First, let's talk about the fundamental aspects of the copper market. Copper, as a widely used base metal, is essential in industries such as construction, electronics, and transportation. Recently, we've seen a strong growth in copper demand as the global economy recovers. Supply and demand. Copper demand is driven by various sectors, including construction, electronics, and transportation. Over the past few years, with the push for infrastructure development, especially in China's infrastructure investment and the promotion of electric vehicles, copper demand has continued to rise. According to data from S&P Global, global copper demand is expected to reach 50 million tons annually by 2035, largely driven by the energy transition and the growing EV market. In the short term, copper demand will remain robust as global economies recover and governments roll out economic stimulus packages. Production and supply. On the supply side, Chile and Peru are the world's largest copper producers, accounting for around 40% of global copper production. However, both countries face multiple challenges, such as political instability, geopolitical risks, and environmental regulations. For instance, Chile's Escondida mine, one of the largest copper mines globally, is experiencing growth constraints. Additionally, Chile's proposed tax increases on mining activities may deter investments, affecting global copper supply. 3. Macroeconomic factors impacting copper. Copper prices are closely linked to macroeconomic indicators. When global economic growth is strong, copper demand typically rises, driving prices higher. Conversely, during periods of economic downturn, copper demand decreases, leading to lower prices. Inflation and interest rate policies also impact copper prices. For example, when interest rates rise, investors may seek low-risk assets, reducing demand for copper. Furthermore, trade policies, especially U.S. tariffs on copper imports, can further drive up prices. Now, let's look at short, medium, and long-term copper price forecasts. These predictions are based on the fundamental and technical analysis we've covered. 1. Short-term forecast, 1 to 3 months. Then in the short term, copper prices are likely to be influenced by a combination of tight supply and strong demand. As global economies recover, particularly with the revival of infrastructure and manufacturing in the U.S. and China, copper demand will remain robust. Additionally, U.S. tariffs on copper imports could further push up prices. 2. Medium-term forecast, 3 to 6 months. Then in the medium term, as demand from the EV and renewable energy sectors continues to rise, copper demand will remain elevated. China, as the world's largest copper consumer, is expected to drive further global demand growth. Under this scenario, copper prices could potentially reach new highs, possibly breaking previous records. 3. Long-term forecast, 6 months and beyond. Then in the long term, the global transition to renewable energy and the growing EV market will be major drivers of copper demand. Market predictions suggest that copper prices could continue to rise in the coming years, potentially reaching $12,000 per ton. With ongoing supply constraints, copper prices are expected to keep climbing. However, investors should be mindful of rising production costs and potential supply chain issues. The global copper supply largely depends on a few key producing countries, whose production capacities play a significant role in market stability. 1. Chile. Chile is the world's largest copper producer, holding around 29% of global copper reserves with an annual output of approximately 5.2 million tons. Chile's mining policies and environmental regulations will have a major impact on its copper production. If political instability continues in Chile, global copper supply could face disruptions too. Peru. Peru is the world's second largest copper producer, with an annual output of around 2.6 million tons. While the country benefits from rich copper resources, recent political unrest and social protests have hindered copper production. Point 3. Democratic Republic of Congo, DRC. The DRC has emerged as the third largest copper producer globally, with an annual output of about 2.2 million tons. While the country's mining sector has grown rapidly, it faces challenges such as underdeveloped infrastructure and geopolitical risks. China is the world's largest copper consumer, accounting for over 50% of global demand. Over the past few years, China's infrastructure investments have continued to grow, especially under government stimulus measures, which have significantly boosted copper demand. Chile and Peru, as the top copper-producing countries, have significant influence over global copper supply. Their political stability directly impacts production. Both Chile and Peru have experienced political unrest and social protests in recent years, leading to disruptions in mining production. For instance, Chile's government is discussing raising mining taxes, which could deter investment and, in turn, affect copper supply. With increasing global focus on environmental protection, stricter environmental regulations have been imposed in these countries. Both Chile and Peru have enhanced mining regulation, requiring companies to meet higher environmental standards, which increases production costs and delays project approvals. In summary, the copper market faces supply-demand imbalances in the coming years, with prices expected to continue rising. Whether driven by long-term demand from the green energy transition or short-term supply constraints due to geopolitical risks, fluctuations in the copper market will be an essential issue for investors to monitor. Thank you for watching this video. Don't forget to subscribe to our channel for more market updates. If you have any thoughts on this topic, feel free to share them in the comments below. See you next time.